right to the floor show. Our traders Sarge, Guilfoyle, and Scott Bauer. Scott, I want to start with you because I was looking earlier at what you were doing yesterday. You said you made some tactical moves. You basically moved yesterday to sell out of XLF, some of your financials, and then you trimmed some of your JP Morgan. What were you buying today?
Some of the real beaten down stocks, Liz, you look at a CrowdStrike, for instance, in a firm, some of the fintech stocks like a PayPal in a Square. I think that those stocks in particular were beaten down so quickly, so rapidly. You know, some of these are 50% off of their all-time highs. So I'm not going all in, but I think this was as good of an opportunity as I have seen over the last 12 to 18 months or so to start picking at a couple of stocks like these.
Sarge, you're playing red to green on what right now after yesterday's sell-off? I'm surprised that we didn't see an even earlier move for some of the bargain hunters.
I engaged in the last couple of days, yesterday especially, in what I call my trading basket, which has become cybersecurity, Zscaler, Palo Alto, software such as ServiceNow, the energy names, ConocoPhillips, Apache, as you know, is one of my favorites. That's my trading basket. Now, what I've done is narrow my investment basket. I'm focusing just right now on the semiconductors because I do believe they will benefit from inelastic demand, even though they're suffering these last couple of days. I do like the banks here. I love aerospace and defense, as you know, and entertainment. I'm focusing on two names, Disney, which is my pick of the year, and Viacom CBS.
Okay, so you like some of the entertainment names. You did just mention some of the energy, of course, Apache, which is a very important name in energy. XLE, Scott, the big ETF there, made new highs yesterday. So I'm very interested to know, is energy still very much the upside play this year?
You know, I'm actually a little cautious about it. I know Sarge is pretty bullish. I'm actually a little cautious right now. I think there's some, you know, macro events, some geopolitical events here that can really move the space in either direction. So I'm kind of on the sidelines, to be quite honest with you. Can we break out to more highs? Absolutely. One other sector, though, Liz, that I'm very interested in, especially with the news today that has made some of these big healthcare stocks really kind of fall off the table here, is the healthcare space for 2022. Regardless of what happens with the pandemic, with COVID, we have an aging population. People are still going to the doctor. People are still getting their, prescriptions done. And I think that this sell-off in some of these stocks here could be a real buying opportunity, looking at a Humana even on this sell-off, looking at a United Healthcare, and then looking at a stock like WBA, Walgreens Boots Alliance, and CVS. I really like that space for 2022 as well.
Okay, Walgreens Boots Alliance is a Dow component. Guys, look at the Dow right now. When we started this show, 7 minutes ago, we were down about 70 points. We're now down 52. I'm wondering if we make a run for this flat line. What surprised me, though, Sarge, is that as the Fed came out yesterday with an aluminum bat and started swinging it around, somehow the markets weren't prepared to know what the Fed has been, basically transmitting and telegraphing out there, that we will see 3 rate hikes this year. I'm just surprised that the market was so shocked. So what is an area that you say you got to get into for the distance? We're here at CES. Tech is everywhere, but I don't want to get, sort of myopic and only think that that's the place to be.
First off, the market was rattled yesterday because of the mention of quantitative tightening, of ratcheting down the balance sheet. The market had already priced in some rate hikes. The market already knew the tapering was coming for a long time. The market was ready for tighter monetary policy, but they weren't ready for the removal of liquidity, the removal of the monetary base from the U.S. economy this quickly. So that's what rattled a few cages. Don't forget, we don't have a Fed meeting in February. We don't have a Fed meeting in April. So there's a lot of danger. If the Fed does not finesse this properly, if they signal somehow something that really harms the market in late January, we could have a tough 6 months here. We are in a spot that is very, I think, difficult for traders, for investors to traverse, which is why I'm trading the markets rather than investing right now. As for something that I think is for the long haul, as I mentioned before, the semis. I mean, if you want cash flow, if you want solid balance sheets, these companies, even though they do appear to be overvalued, yes, they are faced with an inelastic demand situation. Everything that you're looking at over there in Las Vegas and everything I'm looking at on Long Island is run by semiconductors.
from Long Island to Las Vegas. Sarge,
That's right.
thank you so much. Semis are mostly in the green today. Of course, yesterday we had the Qualcomm CEO, Cristiano Amon, telling us he's going all in on the metaverse, and they are definitely a leader. So, I mean, if you believe that's the future, you've got to be in chips because nothing electronic runs without those tiny brains. All right.